Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay because the cost of living is going up once again, including the cost of smashing that like button. So smash it, subscribe, and that's all I got. Thank you so much for watching. Goodbye, Scarlett. I'm just kidding. Seriously, have you noticed the cost of literally everything go up? Nearly half of the people living in the US say that the biggest threat to their financial security is the cost of living. So in today's video, I have some really interesting data that I want to share with you because Papa Bank, the Federal Reserve, has told us that our economists expected the inflation rate to be 4.9%, but instead it ended up being 5.4%, which doesn't sound like a big difference, but in today's video, I want to show you that it's actually more than we even think because it's the highest it's ever been since 2008. Take a look at this chart directly from the government. This is so interesting because it shows us weighted averages. And sometimes weighted averages can obscure some of the more specific categories and they can skew the data to appear lower than what it actually might be. And this is a really good example. This is the increase in the last 12 months from June 2020 to June 2021. Now look at the food sector. It says 2.4%, but that can be confused as the price increase. Now once you click on that to expand that category, you can see that food at home stayed pretty much the same, but food away from home increased 4.2%. Then if you click on all items less food and energy, where the weighted average shows is 4.5%, once you dive a little bit deeper to see commodities not including food and energy, you see that apparel, for example, is up 4.9%. New vehicles are up 5.3%. Used cars and trucks are up 45.2%. Now, this is a real example from a real car dealer that's trying to sell a Toyota 4Runner, which, by the way, is just a very popular car where the base price is something like $52,753. I just Googled it now. But that dealer is trying to sell that car for $75,753, which is a $23,000 markup because of limited availability. Seriously, I should have bought cars instead of Coinbase stock. But the worst of these inflation charts is in the energy sector, which shows us has a weighted average of 24.5%. But the real increase to gas prices is closer to 45.1%. Seriously, Vegas gas has gone up to like $3.89 at this point. It's crazy. But ultimately, there is a problem with how inflation is being shown to us. Let's just say we have 10 people in a given room and 5 of those people are wearing clothes and the other 5 are naked. You could say that on average, at least all the people in that room are wearing at least half their clothes. And if you walked into that room, the reality would be very different from your expectation and you'd probably be very disappointed. Or you might be really happy. There's 3 kinds of people in this world. There's the people that get it, and there's the people that don't. And that's kind of how inflation's like, especially when you take into consideration the weighted average, because it makes the story a little bit more confusing, so let me clear that up. Let's say, for example, that the stock market was included in the CPI, the Consumer Price Index, which is how we measure inflation. That's the numbers I shared with you in the beginning of this video. Right now, asset prices are not included because they're considered too volatile. So we don't include crypto, real estate, and stocks, also because interest rates are somewhat tied to those and it just makes things way too confusing, so we leave those out. But let's just say in this example, we do include the stock market. Okay, let's assume the stock market in my example has a weighted average of 10%. So it represents 10% of the CPI. And in this example, let's assume the stock market went up by 10% in a year, just like it always should. And let's assume everything else just stayed the same. The question is, how much is the inflation for the stock market? Pause the video and let me know down in the comments below because the economy is opening back up and on average, I'm getting desperate for more engagement. Okay, thank you for not doing any of that. The real measure for the stock market, the inflation, would actually be 1%. Not 10% like you would intuitively think. Why not, Andre? The market just went up 10%. How's the inflation 1%? Because remember, inflation takes into account all the indexes and it averages them out in relation to the economy. And that's why when we're looking at these preliminary numbers of, let's say, the energy sector and we see 24.5%, the reality is your price increase at the gas pump was closer to 45%. And that's a very different number. And that's why when we're talking about inflation, sometimes it's hard to talk about because we're not even talking about the same thing sometimes. And I make this mistake all the time because I take into consideration asset inflation. And that's a mistake. I shouldn't, because asset inflation and consumer price inflation are two very different things. But for me, like real estate, for example, is a pretty big deal because it is the biggest purchase you'll ever make in your lifetime. And I think it's important to track it year over year to see how much the cost of living has increased, but we just don't do that. So it's complicated, but long story short, the cost of living has become more expensive and we have a problem. Rents are another good example of something that's going up. Now, the CPI data does not include real estate prices into the mix, but it does include shelter. Shelter represents 2.6% as a weighted average, but the real increase in rent has been 1.9% for primary and 2.3% for owner's equivalent rent of residences, which is just saying how much money you'd have to pay somebody who owns their house to rent it out. That is the owner's rent equivalent. Here's another good example. Transportation services represent 10.4%, but car insurance is up 11.3%. And if you want to travel, well, that's too darn bad, because airplane tickets are up 24.6%. And this one makes the most obvious sense because we all want to travel, we all want to get out of the house, and we all want to have a normal life again. But going to the hospital, for example, has gotten more expensive. And this is another good example of these weighted averages because it shows that medical services only has a 1% weighted average in the CPI, which doesn't sound like a big deal. But the real increase to seeing a physician, for example, has gone up 4.1%, and going to the hospital has gone up 2.4%. Now, these numbers don't sound like a big deal. It doesn't sound like a lot. But you have to remember that going to the hospital can potentially cost tens of thousands of dollars. So a couple % difference can make or break the difference between having a good health and not having one at all. And it's a shame because healthcare costs seem to go up every single year for decades. And this is because our healthcare system incentivizes hospitals to do more work rather than better quality work, because they also understand the more prescriptions and the more visits, the more money they get to make. And because most of us will have our healthcare costs paid for by our employers, which by the way, most of us won't have in retirement, they also know that this removes the competition because you're not going to shop around for a better rate anyway. Why would you? It's paid for by someone else. And that's what gives them free rein to charge whatever it is they want. And this is why when you're in retirement, your healthcare costs are going to be some of the biggest things you pay for. So the obvious question becomes, how do we fight all of this inflation? One of the things is the government wants to step in and rethink about how we calculate inflation in the first place, which is why they want to adjust Social Security. So let me introduce you to a concept called COLA, Coca-Cola. No, I'm just kidding. This video is not sponsored by Coca-Cola. Instead, it's cost of living adjustment. And here's what that means. COLA is something we created back in 1973 to help adjust the cost of living for people that are retired. That way, if you're somebody from good old 1985 and you retired on $20,000 a year, which back then would have bought you a pretty decent lifestyle, you'd still be able to afford the basic necessities like gas and medicine, and you don't get left behind. Every single year, this cost of living is adjusted based on the CPI, that consumer price index I talked about earlier, and the higher the CPI, the higher this cost of living adjustment becomes. In fact, since the year 2012, we have adjusted somewhere between 0 to 2.8% on average, which is very little. And this year, our COLA is 1.3%, which is only an extra $20 a month for people, which isn't much. Since the year 2000, it's estimated that the Social Security income has actually lost about a third of its purchasing power. 30%, which is kind of crazy. So on average, over a long period of time, inflation has actually outpaced the income of Social Security retirees, and you can actually see this data play out. Since 2000, the Consumer Price Index is going up over time, with the exception of these dips in 2008 and 2020, but overall it's going up. Meanwhile, the index for COLA doesn't reflect that same upward trajectory at all. And that's why retirees are having such a hard time paying their bills. It's not something they complain about just for fun, it's right there in the data. Now, the next time we have this cost of living adjustment calculation is going to be in October for next year. And they're estimating that it's going to be something like 6.1%, which is the highest it's ever been in the last 30 years. Now, if you've made it this far into the video, you might be thinking, Andre, I don't care. I'm too young. I'm not in retirement. I'm nowhere near retirement. This is boring. But the truth is, it affects all of us. Maybe our parents, maybe our grandparents, and ultimately ourselves, because it shows you that you just can't rely on the government to pay for your income in the future, because eventually you're gonna have 30% less because of inflation. And you don't wanna count on the government unless you wanna wait another 30 years for it to catch up. So having said all that, let me just give you my personal thoughts about everything that's going on. You know, it's funny because one of my friends here on YouTube, his name is Meet Kevin, he's a very smart guy, talks a lot about deflationary factors, which act as the counterbalance to inflation to hopefully bring a balance to the force, right? And one of the things he talks about as a deflationary factor is an increase to efficiency, productivity, and a development of new technology. Because as we develop new technologies, the cost to produce goods and services decreases, right? So our dollars can buy more things, which is a good thing. That is a deflationary factor. And one of my only counter-arguments against that is that the level of consumerism, psychologically, was very different back then than it is today, at least here in the United States. I don't know about the rest of the world. For example, my family back then had only one TV. It was like this giant TV. It had antennas sticking up at the top with an attached VCR. You had to like adjust the antennas, maybe slap the TV on the side to get it going. The point is, it was pretty cheap, and we didn't have monthly payments for things like Amazon Prime and Hulu and Disney and Netflix and Tinder, so we could Netflix and chill, and we didn't have to upgrade our cell phones all the time because smartphones weren't really a thing back then, so we didn't have to spend $1,000 every few years just to keep up with planned obsolescence. Which, by the way, if you don't know what that means, it's where companies create products that will intentionally become outdated, where customers have to buy them again and again and again, kind of like what Apple did with their older iPhones, where they throttled their performance because of battery concerns. Seriously, check out a documentary called the Lightbulb Obsolescence Documentary. It's pretty incredible. And we also didn't have to pay for internet because we didn't really have a computer. Well, that's not true. We did have to pay for AOL.
You've got mail.
Hello? Ah, Mom, you ruined my download. Smash the like button if you got that reference. Overall, we had a lot less financial stress and financial overhead, and a lot less mental stress, and only time will tell just how much our mental health will be affected in the future from constantly being glued to all these social medias and constantly asking people to smash the like button, because the thing about efficiency is that it affects not only productivity, but also marketing. Because 20 years ago, the subscription-based model was relatively rare, but nowadays it's everywhere. Back then, you could buy one video game for $40 and destroy Sephiroth 1,000,000 times. But nowadays, you buy a game for $39.95 and there's a $40 DLC and $10 in-app game purchases. And before you know it, it's $10 here and $30 there, and all these monthly fees add up. And that's just psychological and marketing efficiency for you, because companies have figured out how to milk the human psyche for everything, because the way to get us to buy anything is to just lower the monthly payment and just make it way more frequently. So even though, yes, productivity and technology and efficiency have all gotten better, and the quality of life has too, so has inflation. It's such an interesting topic because some people think inflation is not going to happen, some people think it will in the future, and some people like me believe it's already happened. And that's why I created my YouTube channel, because the way to fight inflation is to save your money by living below your means, investing the difference, and not relying on the government to help you out. And that's why I love dividend investing, so I could create passive income. That's why I love investing in Bitcoin and cryptocurrency, and that's why I'm trying to do more real estate. I don't want to be a cynic, but I do think that on the whole, life will continue to get just a little bit more expensive. As always, don't forget to smash that like button, subscribe, and go get up to $250 worth of free Bitcoin using this BlockFi link right here. Then go get your 2 free stocks with Webull. When you deposit $100, you can get 2 free stocks valued up to $2,300. And once you get them, go track them automatically with the spreadsheet linked down below in my Patreon. Love you. Thank you so much for watching this video. I'll see you back here on Monday, Friday, sometimes a Wednesday, and I'd love to know your thoughts. Is inflation here to stay, or am I just overreacting and we should just sit back and let the government do everything for us? I'd love to know your thoughts. I'll see you soon. Bye-bye.